Okay, it's just ticked over to 12:32. Just so you do know that this is a live webinar. So 12:32 on Monday, was it the 21st of September? So first, quick bit of housekeeping to start with. So firstly, I need to make it clear that this presentation is only meant for high net worth individuals and sophisticated investors. Some of you may have completed different forms or ways of self-certifying that, but there is obviously an appropriateness test that you can complete on the Source Capital platform as well when registering, and that means that you've decided that you are able to view and receive this information. The other piece of housekeeping is that this is a webinar, so Mike, our borrower, he will speak a bit later, but everyone else will be on mute throughout. But we would like to welcome any questions. So if you have any questions, please enter them into the chat and I will check them as and when we're going through. So I believe now is time for us to start. So you can see at the bottom there, this is presentation, the webinar, sorry, is about Abbots Way, which is a project in Newcastle-under-Lyme. Okay, so first of all, we'd like to say hello and introduce ourselves, or myself anyway. I'm in the top left there. My name's Stephen Wallis. I recently joined as the Operations Director at Source Capital. I've got roughly 15 years of financial services experience, everything from investment banking to payments to consumer lending, and more recently peer-to-peer. So peer-to-peer business and now peer-to-peer property investment. I think a lot of you will know the other two people on the top there. So Stephen Moss, the Managing Director of Sourced, and John Wilson, who is our Relationship Director, who I believe probably quite a few of you already know. And if you don't know him now, you probably will get to know him. So just there, the directors of Source share over 100 years of property experience. They've got their own portfolios and continue to work on their own development. So yeah, we do the do as well as talk about it. Okay, so a bit about Sourced for those who maybe have heard about this webinar but aren't familiar with the company. So we have flagship developments across the UK. We've got a pipeline of over 277 million. We have 100 plus offices across the UK. What that means is that the other arm of Sourced is the franchise arm of the business. This business is growing rapidly. There's about 110, I think, franchisees across the UK at the moment. And those franchisees are part of the network, which are the people who have access to the peer-to-peer platform, which is Source Capital. So we only lend to our own network, and they are the borrowers. To date, we have 100% repayment success. We actually recently had a very good success with a project which paid back early to investors just last week. It was in South Yorkshire, and the finished houses at the end of that project sold within 24 hours of going on the market. So we all know that it's a bit of a funny year, 2020. But yeah, certain areas I think of the property market are doing very well. There's obviously been some changes to permitted development. There's stamp duty, land tax changes that have happened. So we know it's a tough year. I think it's a tough year for everyone. But yeah, we're withstanding this very well at the moment. So we also like to point out that we charge 0 fees to investors. So that means you don't pay to get into a project. We don't charge a management fee. We don't charge you at the end. And that's something obviously that's not the case with every platform, but we firmly believe in not charging investors any fees. You'll understand a bit later if you're not already familiar with how the interest works and the returns that are on offer. They vary between 10 to 12% depending on the level of investment. And just that line again at the bottom, just making sure that it's clear this is only for sophisticated and high net worth investors. Your capital is at risk and there is no financial services compensation scheme protection on peer-to-peer investments. So a bit more about Sourced and our values. So we have a commitment to customers. We are transparent. We take risk seriously. I'm a former chief risk officer, actually. I've got a risk management qualification. We are honest. We pride ourselves on diversity and innovation and also constant improvement. So a bit of context, actually, one thing I wanted just to discuss a bit is just going a bit more into detail about what's going on this year. So obviously a lot has happened, and especially in the investment landscape. So the types of investments which are open to, especially to high net worth and sophisticated investors, these can range from peer-to-peer to precious metals, to stocks and shares, to even cryptocurrency. And I think that the reason why we believe in bricks and mortar is that we take a sort of, I suppose, a long-term view on what we're doing and what we're building, and we like the fact that there is security within property, which you won't necessarily find in all of those that I've just listed. So the equity market, stock market took a battering, obviously, earlier in the year. But I think the key thing for me that came out of that was the dividends being taken away. So investors who like income from stocks and shares, not just the capital appreciation, have had a tough year. Cryptocurrency is a bit of the Wild West for anyone who invests in it. And of course, there are other areas, and precious metals, is a safe haven, but it won't give you an income. Okay, so, right, I'm hoping that I will be able to get Mike in now. So Michael, I'll just give a really brief introduction, then I'll let Mike speak. So Mike has extensive experience in a variety of business sectors: construction, manufacturing, and travel. His experience is mostly in refurbishment, renovation, conversion, and that's for resale or to rent out. His more recent experience includes full renovation of a Victorian house for rental and property sourcing. And that's just a couple of key bits of information there that where Mike applied to the Source Capital platform for this loan. We completed the full application. He was checked, and a financial review has taken place, and that includes KYC checks and anti-money laundering AML searches. So there's a bit there about what Mike's done, but I'd probably rather he talks about it. So if you just bear with me 1 second. Okay, Mike, can you hear me? You may be on mute, by the way. Hello, Mike, can you hear me? I think you might be on mute. I think I've just tried to unmute you, but I think you might need to do it from your side.
How's that? Is that better?
There we go, Mike. Thanks. Yeah, there we go. There we go. Always the odd technical hitch at the start. Yeah.
Well, in fairness, there is a big button on the front of the phone that says unmute, but I haven't looked at it.
Okay, great. Thanks, Mike. So yeah, I thought at this stage it'd be good for people on the webinar to hear a bit more about your story and your recent experience, and yeah, maybe even if you can see those examples in the table, if you can talk us through some of those, or maybe just give a general overview of your experience.
Well, yeah, okay, sure. As you said, I've got experience in a variety of different business sectors going back over, well, many decades, but I've always been involved in property, usually as an investor, but sometimes as a developer. I've done joint ventures in the past, in Kent and up here in the north in Stoke. And the reason that I joined Source is because I took the decision about a year and a half ago that as I was doing more and more projects, that I would actually just make it a full-time business rather than doing it as a secondary business. So it's been pretty flat out really since I started. I did the training in Source, learned a lot of things that I thought I knew, but it turned out I didn't, and really just got stuck into a number of projects, one of which I'm actually at now, which is a commercial office conversion into an HMO, which I'm doing with a friend investor for our own portfolio, but I'm managing the conversion directly. So I do have a little bit of, or quite a bit actually, of construction industry knowledge from past work as well. So I think, without me waffling on, I mean, do you want me to go into more depth on that, or broader experience?
Yeah, I think maybe, so we can see here actually, I mean, I think everyone can see this. So we can see there's an investment in Stoke-on-Trent, which was a buy and refurbish for buy to let. There's been commercial conversion to HMO, house of multiple occupancy, for anyone who's not sure of that terminology. There's one here in Eastbourne, buy to let investment, and the conversion to flats. So yeah, I mean, I think that gives a good overview of the different things. So maybe actually let's let's jump more into what we're talking about today, I think. So let me just go down. This just tells a bit more about Mike's relationship with Source. So Source Stoke-on-Trent is Mike's office. There's the developer name, company number for anyone who wants to look that up, registered office. And Mike, I think maybe it's important to mention that there is another director involved in this project. Is that right?
Yes, that is right. So Clive is another director on the SPV for this project, and I've known him for about 30 years, and we've partnered on a variety of things on and off over the years. So he's come in with me on this one. He's actually helping with some of the work as well. You know, there's quite a bit of upfront preliminary work to do, and because I'm on this conversion, we're sort of spreading that around ourselves so that we can be a bit more efficient.
Very good. And one of my favorites there, so the key person risk is removed as well, with my risk hat on. Okay, good. So here's this is just a little bit of information about Newcastle-under-Lyme for anyone who doesn't know. So this is it's a town, a very nice affluent town outside of Stoke-on-Trent. It's North Staffordshire, I think, isn't it, Mike? Yeah, and I remember it. I think when I was at school, our school played rugby against, I think it was their grammar school or something. I think so. I think the schooling's quite nice. In fact, over the weekend I was just checking out the Ofsted information on the government website. The schools are all good and outstanding by the looks of it. So, yeah, it's one of those places that potentially is going to benefit from this working from home acceleration. You know, I don't know that for sure, but I think people will start to seek nice parts of the country to live where maybe their money goes a bit further than it did, especially in the southeast. So I think, yeah, Newcastle-under-Lyme, very, very good location. Okay, so Mike, here you go. So here's the image of how it is currently. So I mean, I can walk through. Maybe feel free to jump in if there's anything you want to add. But the property is on a road called Abbots Way. It's currently a substantial plot with a 4-bedroom house. I'll show you the floor plan in a second, so we don't need to necessarily go through all that. But yeah, you can just see that to the front there's a nice driveway, and then the key points of this project is that it sits on a generous plot, and you'll start to understand what that means as we move through. Okay, so here's some internal images. So yeah, needs a bit of love and attention, and Mike, yeah, maybe I'll skip a couple of slides and then you can maybe explain a bit about that. Here's the layout as well. So that's as is currently. And here's the plot there. So actually, Mike, maybe this is a good time to jump in because I think the plot tells the story. So maybe if you want to explain what the plan is.
Yeah, so a couple of things on that, Steve. You're right about Newcastle-under-Lyme, and where this project is located is in an area called the Westlands, which is well known to anybody in this area as being the sort of affluent spot, if you like, where a lot of people aspire to live to, move to. It's a bit historical because the merchants and the pottery owners from Stoke-on-Trent built houses there in the turn of the century and in the 30s. And this house is a 1930s, late 20s, early 30s house. And one of the other really key important thing as well is that there's a good demand in Westlands for people with money because it's very close to the Royal Stoke Teaching Hospital. And there is about 6,000 people working there. It's an absolutely colossal site.
Wow.
And so, you know, the doctors and the consultants and the others who make a little bit of cash, Westlands is the ideal place for them. And there's quite a few live on there.
Brilliant.
So, yeah, you know, it's the saying is I've spoken to a lot of agents. I've had a lot of appraisals, builders, all sorts, and everybody is of the same view. You can always sell a house on the Westlands. So, you know, it is a popular area. With this one, the building plot, shall I explain a little bit about the background of the project itself, the house itself?
Yeah, please. Yeah.
Yeah, so it's a probate sale, and it was inherited by a guy and his sister. He is in his mid-80s already, so his mother lived there. She was over 100, So she obviously did well. But he was in his 80s, and he was formerly a house builder. He was one of the biggest house builders in this area, and built a number of large estates. So he was the one who dropped plans and applied.
Oh, have we all still got Mike? Yeah, Mike, can't hear you. Can you hear us? That's a shame, just getting into the juicy details. Okay, let me just see if that's something on my side. No, looks like Mike. Yeah, so it looks like we're struggling. Right, hopefully Mike's going to come back. I will keep an eye to see. Looks like there we go. So now he's dropped off. Let's see if he's come back. Sorry about this, folks. Okay, I'm guessing you can still hear me okay. Let me just see once again. Yeah, okay, you can still hear me fine. All right, that's very strange. It doesn't allow me to. I think you may have gone again. Right, I tell you what, everyone, I'm just going to keep an eye on that. I'm going to skip forward a bit. We can get Mike to tell us the details about how he found the site a bit later. This gives an idea of what it's going to look like. So yeah, I think Mike was saying that it's a probate, so condition maybe not the best, but the idea is to build something that's really attractive to those types of buyers that he mentioned that the estate agents said are ready and waiting. Let's just see if we've got Mike again. No, seems to have lost him. I think he said he was having to dial in, so hopefully he's able to, as in off his phone. So let's see if he can come back. Until then, so yeah, actually, I can just emphasise and expand on what Mike was saying about the area. So Weston's in Newcastle-under-Lyme. Yeah, you can check on these schools and the hospital. You can see, and you can see the distance from the town centre if you bring it up on Google Maps. Yeah, and like I say, so if you're not familiar with the area, it's got a good location near to the M6 and the A50, and then train services run from Stoke-on-Trent, which is nearby. And yeah, there's some information there about the house prices. Yeah, we've got some up-to-date information on that, which is coming later. Let me just see again if we've got Mike. Has he been able to rejoin? No, hopefully he's going to be able to get back in very soon. Okay, so I'll just continue until we get Mike back on. Okay, this is just a bit of information actually about who's going to be working on the project. So there's the main contractor there, Ixia, I guess is how you pronounce their name. And you can find out all about them on their website there, ixiaconstruction.co.uk. Here's a bit of information about the people involved from a legal point of view. And this will be all in the pack, which you can receive on request. Okay, so yeah, we're about to get into the numbers. Let's just see if Mike's here before we do that. Here we go. Okay, Mike, I think that worked there. You're on mute again. Hello, Mike.
Hello, I'm back again.
There we go, no problem. Okay, so I did just jump ahead, but I think we were kind of getting to the point where we'd maybe got the full gist. I think you were talking about the how you've been able to source the property, and I think if I'm right, you managed to get it at quite a nice discount versus the valuation. So maybe if you could just explain that, and then I'll jump into the actual numbers, I think.
Yeah. Okay. Yeah. And sorry about that. I don't know what happened, but
That's okay.
I was merrily talking to myself and then realised that there was no one listening. Yeah. So it was a property that I'd made an offer on that was rejected. Then a sale fell through. I made another lower offer, and that was rejected. And then eventually they had another sale through, and they came back. The agent came back and said, "Look, they've had enough. They'll accept your best offer if you can agree to it today." So I actually did lower the offer again, and that was not in any way because I was trying to exploit the situation. It was just because that's where I genuinely valued it at that time, you know, to make the project workable for a raise through sourced capital. So that's how I got to where we are now.
Okay, brilliant. Thanks, Mike. And I think this executive summary, maybe people have been able to have a quick read while we were listening to Mike there. But I think it's better to illustrate in the tables on the next page. So here's the overview. So the loan amount for this project is £595,000. The forecasted GDV is 900,000. The loan interest rate is 10% per annum, but there's bonus interest at 2% on investments over £20,000. The expected loan term is 8 months, but obviously everyone should bear in mind that may be longer. You know, it's not necessarily fixed. The repayment of interest will be at the end of the term. And the loan security, I think anyone already familiar with the Source Capital platform will know that we offer a first legal charge, plus there's a personal guarantee, and there's also, Mike has also put some cash into this deal, and that counts as borrower's equity. The loan exit is to sell both properties on the open market. Planning has been approved, and we've had the RICS independent valuation completed. It is SaaS compatible for those who've taken control of their pension through a SaaS, and it's also ISA compatible under an innovative ISA with that £20,000 per year limit. The minimum investment is £250, and it is important to note that the returns are not guaranteed. Your capital is at risk, and obviously there's no FSCS protection, as I stated earlier. Okay, so this maybe goes into a bit of how Mike's managed to structure everything. So the purchase price is £385,000. The cost of works is 288,000. There's obviously some upfront costs for stamp duty and legals, which brings the total cost to £687,555. Mike has injected £78,000 into this, which I think I was working out what percent it was. I think it's around 15%. The total loan required is this 595,000 that we mentioned, and that valuation. So Mike has paid 385,000 for the property. It's actually been valued at 535,000. So this next figure, we realised that there was a mistake in the in something that went around that you might have seen previously, which had this day one loan to value of current valuation at 72%. It's actually 57. So that's showing some nice equity already even at day one. This creates 228,000 of equity with the 150,000 difference between the current valuation and the purchase price plus the 78,000 cash injection. Finance costs are shown there, as is the developer profit. So what Mike and his partner are looking to make at the end of this project. And again, just the forecasted GDV, and you can see there the profit to GDV percent. You can see the loan to value to GDV at 66%. We have a maximum of 70 for our projects. So this is nicely within that. And you can see there the LTV of the purchase price is 80 and the LTV of total costs is 85%. So I will at this point just double check to see if we've had any questions come in, because obviously that's a lot of numbers and information. Yeah. Okay. And Holly just mentioned that the image earlier, I think Mike, you might have missed, is for the new build, the nice shiny looking property that we showed in the slides. Is there anything you want to add in here, Mike, or are you happy for me to carry on?
Yeah, no, I think that's you're summarising it better than I can. So yes.
Yeah. Okay. All right. Great. Let's just see anything else
Carry
come
on.
in. Loan amount towards the purchase. Sorry, loan amount towards the purchase. So how much is being drawn down at the start? 387. Not sure. Yes, sorry. Yeah, good point. So thank you, Holly. So if you take the purchase price and you subtract the 78,000 that's going in, so it's 307,000, which is being borrowed against the purchase price. Yeah, I think hopefully that's what you're referring to there, Holly. Yeah, draw down at the start, exactly. Sorry, yeah, good reminder. Thank you. Okay, so I'll keep going through. Okay, so this is just now obviously talking about the all-important exit. So on completion of the project, the borrowers are going to sell the properties on the market. Interest will be repaid with the capital at the end. And that table below just, I suppose, reiterates what Mike was saying about the area, this particular area, Westlands. Obviously, I think, you know, wherever you live, people will know this, that there are certain areas which are very sought after and affluent. Westlands is the area in Newcastle-under-Lyme, from what I can gather. And there you can just see, so actually, Mike, this is probably quite a good question. So are you looking to sell both properties for the same amount at the end, or will one be worth more than the other? Is that how it's been calculated?
Well, we've calculated it, Steve, on them being equal value, but I mean, we're feeling sort of quietly confident that the new build will have a premium to it. I mean, they generally do, and you know, because of the desirability of the area and the property, if we can actually sell it before the build is completed, then
Yeah,
and the buyer can spec it out to how they want, and you know, we should achieve a premium on that. But for the exercise, we've based them both on equal sale values.
excellent. And so obviously that 900 GDV, so we would assume 2 4-bedroom properties valued at 450,000, and we can see here what others are valued at in that area. And even if you bump up to the 5, it really jumps. And I suppose the 3s and the 2s are not massively relevant to what we're saying. Let's just check again. Any more in the chat? Marketing costs included. Total SF. Sorry, Voon. SF. Could you just confirm SF, please? So marketing costs included in the profit, square footage, yeah, that's a good question. Thanks, Voon. So marketing costs included, yeah. So in the profit, I'm guessing you mean, yeah, so the profit will include everything. And the square footage, yeah, Mike, have you got some numbers on the square footage?
I don't know if you've got a calculator handy, but it's 127 square meters.
Okay, I've heard times by 10 is close enough.
Right. Okay.
I believe, Voon, unless you could tell me otherwise. Yeah. So yeah, good question, Voon. Thanks for that. Let's see. Yeah, perfect. Okay, great. Thanks, Voon. Yeah, I think finger in the air times by 10 is good enough normally. Okay, so yeah, so this just shows a bit of the data on the house prices in the area. So this will be Newcastle generally. So obviously, you know, you won't be taking into account the particular area and the road. But you can see there, so the last 5 years there's an 11% increase, even with, you know, what we would have expected to have happened this year, which is that there's been a bit of a drop off. So I think that it's, you know, we're not going to obviously not talk about what's happening this year. But what we found with other projects that we're working on is that sales are still happening. There's an 8-month term, so it's not like we're talking 2 or 3 years into the future here. So yeah, you know, we believe that hopefully that the market can withstand what's going on, but even if it drops, you'll see on the next few slides that there is sufficient, there's a sufficient safety net for a drop in prices. Let's just check. Okay, yeah, and then we're just seeing that Voon's questions can be answered a bit more. Okay, so the security, which obviously is a key part of the investment. So there is a first legal charge. So I'm sure everyone listening to this knows what that means, but just in case, so a first charge means that you have the priority on repayment. So if you own your own house at the moment, no, you don't, the bank does. So unless obviously you do own it outright and you don't have a mortgage, but the bank will have first charge, which means that if they ever needed their money back, they would get paid first, basically. So this is the same security which for our investments as well. it's for the full loan amount. So Mike isn't buying, on a deposit with a deposit and then raising the rest. The amount is going against the whole property purchase plus the development. So solicitors will act on behalf of the security trustee. And yeah, it's just saying there, obviously property values can go down as well as up, so your capital is at risk. There's then a personal guarantee from the borrower, and as we've already mentioned, there's 78,000 that's been put in as well. Drawdown the funds are released in stages. Yeah, so obviously an amount at the start to purchase the property, and then other amounts are released, providing there's a surveyor report and approval from the security trustee. And we do share these reports with investors during the process. So in terms of regulation, Source Capital is the trading name of JARC1 Limited, which is an appointed representative of rebuildingsociety.com. And you can check either of those numbers on the registers there. Okay, I think this slide illustrates that safety margin and the breakdown, I suppose, and the seniority in the best way. So the loan capital is there, you can see up to 595,000. There's then the interest, which is going to be paid, which is the blue. The profit that we detailed that Mike should be looking to achieve is in green, and then there's the equity, the 78,000 that's already been put in there. So yeah, I hope that's clear. I'll just stop for a second just in case there's any questions on that, because I think it's quite key information, just checking that everyone's happy and understands it. Okay, all right, great. So this just details a bit what I said at the start about how Sourced is set up. So there's the support network, which is the franchise arm. So this part of the business will assess the project and help to manage the launch. It will facilitate the project, but through the Source Capital platform, which is separate to the franchise side. So they support the borrower at each phase of the project, and there's a huge amount of experience across the whole business, but also in that area as well. And this is how we've said that Mike has come through Source, as he was saying earlier, and this is how the project has come to the platform. Okay, so I'll just go a bit into the offers which we have for investors. So there's 2% cashback for investing a minimum of £20,000. That's it's returned at the end of the term. There's a £50 bonus for a minimum of £500 investment, and that's on your first investment. It's important at the moment, obviously, to repeat those disclaimers at the bottom. Your capital is at risk. Investment is subject to terms and conditions, and peer-to-peer investments are not covered by the FSCS. To find out more, you can see our risk statement on the website. Okay, there's different ways that people can invest. You can invest through a regular investment, so instantly online from £250. You can invest through your ISA. So that's obviously £20,000 per year limit. You would receive the same 12% returns, and obviously we're not tax specialists, so it's up to you to decide which route is best for you. You can also invest through a SIP or a SAS. You can make your pension work harder in this way. There's some good books especially on SASs. Mark Stokes and then Louise Wrighton just completed one, which gives some case studies about people who invest through their SAS, and it's a very good read for anyone who's looking down that route. And just to really repeat what I said at the start, investments are only suitable for sophisticated investors or high net worth investors. But for anyone who's joining the call late and didn't catch that at the start, you can self-certify. There's specific documentation, but you can also achieve this status by completing our appropriateness test on the platform. Okay, so how to actually invest. So visit sourcecapital.co. You can register, pick a project, invest and earn up to 12%. I believe there might be an extra chat. Why is it not covered by FSCS? So FSCS, I think a lot of people know, so the £85,000 limit. It tends to be, I think it's pretty much only applicable to your deposits in a high street bank, more or less. I don't think hardly anything else is covered. They obviously have to pay something to be able to access that fund, and we, peer-to-peer isn't covered, basically, and we don't pay into that scheme. Q&As, let's see. You need to make sure investors' capital can be at risk. Perceived as the largest risk to an investor's capital. and main risk. Okay, yeah. So let's go back actually. Okay, thanks for the questions, everybody. Let's go back to the risks. I think I think we've highlighted some of the risks. So some of the risks would be that the end properties didn't sell. Mike, I guess, is there an opportunity to remortgage and rent out the properties to pay back the capital if need to be?
Yes, there is, and especially on the existing property, because obviously the modernisation of that will take much less time than the new build.
Yeah.
So, yeah, I mean, yes, they're highly desirable for rental or for sale. So we could easily do that.
Yeah. Okay. No, thanks, Mike. And yeah, so I think the key risk, I think the key risk would be that they wouldn't sell, or that they wouldn't sell for for an amount which would pay back investors' capital here, and plus the interest. But I suppose as and when they do sell, you are first in line to be repaid, and there's this, I suppose, safety margin of which essentially equates to a drop in the value of the two properties until your capital is hit. Okay, let me. Will they be sold off plan? Yeah, I think maybe. Did we mention that earlier, Mike? So you would look to start marketing the both properties quite early on, or how would you look to actually go about promoting them?
I think on the existing property, that would really need to be finished before it could be marketed effectively, because that's a little bit harder to visualize as it is. But certainly the new build, that can be sold off plan. We've got the CGI for it. We'll get detailed drawings. We can have everything there, and we intend to do that if we can.
Okay, excellent. I think there's some other Q&As. Restricted investor did the online test. So am I a sophisticated investor now? So if you completed the appropriateness test, then you are able to receive this information and to view it, and I believe to invest, but we would come back to you. Depends, I think, exactly maybe on what your definition of restricted investor is. Okay, but thanks for that question. Oh, okay, Holly. Yeah, okay. I think right. Yeah, if Holly knows who that is, she'll reply back directly. Okay, I'll get back towards the end because we were coming towards the end. Thanks very much for your time on this Monday lunchtime. Let's see. So we went through there, different ways to invest. So you go to the platform, sourcecapital.co, register, make sure you pass the test, pick a project, and then invest and earn up to 12% return. I think a lot of people are aware that we have people in the team who you can talk to as well. Relationship Director John Wilson is your best first port of call. He's happy to answer any questions if people would like to pick up the phone and speak directly. And there's a refer a friend scheme as well, and where you can earn up to £250. I think we're almost on the last slide, so just check any others. Mention investors have first charge. Only one party can have first charge. Everybody else just gets a charge, but not first. Yeah, so the investors collectively have the first charge. So yeah, you're right that say if it was a bank lending to you for your mortgage, then it would be that one entity, but all investors are deemed as collective investors, and so they all have that first charge. Okay, Tom, I hope that answered your question. If not, feel free, obviously, to get in touch if you need any more information. Yeah, so the charge, so the charge is registered against the property, and the security trustee will be the person who holds it. There we go. So yeah, we can go back to Tom. Okay, so this particular project, Abbots Way, Newcastle-under-Lyme, is going to go live at 10 a.m. Tomorrow morning. That's Tuesday, 22nd. You'll be able to see it there on sourcecapital.co/projects. If in the meantime you need any other information or assistance, please do get in touch. I think that may be about it. Here we go. These are different ways you can contact us. So capital at source, there's our phone number. And there's the website. So, Mike, anything else, or do you think that's good for wrapping up today?
No, I think that's good. That's a really comprehensive overview of all of it. So yeah, good.
Excellent. Okay, thanks very much, everybody. So thank you for your attendance. Please feel free to get in touch, and we'll look forward to hopefully seeing you on another webinar very soon. And yeah, please look out for this when it goes live tomorrow. Okay, thanks very much for your time. Thank you.